Howdy, boys and girls. It's Raymond Dahlman here with the weekly economic update for, what is today? October 4th, 2021. It is a Monday. It is a beautiful day here in Colorado. The sun is out. It's probably maybe 70 degrees. I think our last 70-degree day is going to be tomorrow. So don't feel too bad for me up here in the mountains. So I'll try to survive it, with some coats and hats and turn the heater on. But good weekend. Astros took 2 out of 3 from the hated Oakland Athletics. But hey, they had a pretty good season. Tony Kemp did pretty well for them. For any of my baseball fans out there that are watching this. So unfortunately, I don't know if I'm going to be able to upload this to Facebook today because it's been down since, I guess, about 9:40 my time, Mountain Time. So it's if you normally watch this on Facebook, you might have to, if you are watching this, probably watch it on YouTube. So anyways, like I said, I hope everyone had a fantastic weekend. It was pretty lovely here. Got some chores done. Did not get to winterizing my trailer yet. I'll probably do that this week. With our first freeze less than 2 weeks away, it's, I know most of my clients are down in the Sun Belt, from Texas to Georgia and along the South. But, get your house. Now is the time, to get your house ready for winter. And, any things you need to do around your property, cutting down dead branches. I was going to do that yesterday, but my chainsaw wouldn't start. So I'm going to have to take apart the carburetor because I left gas in it all summer. But anyways, enough about me. Let's go ahead and where's my cursor at? Look at the weekly economic update. Hey, look at the beautiful sky here in where do I live? Larkspur. So, all right. Here we go. Oops, sorry, didn't mean to hit the mic. All righty. The week on Wall Street, higher bond yields and a legislative stalemate in Washington, D.C. added up to losses for the week. The Dow Jones average declined 1.36%, while the S&P 500 lost 2.21%, the NASDAQ lost 3.20%, and the international stocks shed 2.58%. An ugly week is the title of the next paragraph. The reality of a more hawkish Fed finally hit the bond markets, sparking a sell-off in bonds that sent yields higher. Higher yields hurt technology and other high-growth companies, and that weakness spread to the broader market. Higher yields can reduce the value of a company's future cash flow, which may reset valuations. Congress added to the market uncertainty. It was unable to advance an infrastructure bill, and it made little progress on the debt ceiling agreement. After a sell-off to close out September, stocks surged on Friday on news of a potential COVID-19 oral therapeutic, an easing of yields, and reports that President Biden was traveling to Capitol Hill to break the logjam of legislation. Well, where was he? Oh, I guess he was at the White House. So, all right. Powell in the news. Fed Chair Jerome Powell was at the center of 2 news developments last week. The first was the announcement of by a prominent senator opposing Powell's renomination, heightening market uncertainty over the leadership transition when his term expires February of 2022. Powell later made comments at a European Central Bank event, admitting that the current bout of inflation may last longer than he and other central bankers may have previously expected. No, shoot. I tried to keep this clean. I've been saying this for like a year. It's like you can't create all this money and expect not to have runaway inflation. Did we not learn anything from our histories class back in, I guess it was high school, when we learned about the Weimar Republic and, what Germany did post World War I and inflating their currency and created a giant mess. And we know what that led to, Hitler, World War II, so anytime you have a lot of, it makes me wonder, are the idiots in Washington, is this intentional? I mean, you can't have this many people who are supposed to be bright that, just continue to do I mean, it's like standing on the tracks with a train coming at you and saying, well, the train's going to move. I'm sorry, it doesn't work that way. All right. But he remained steadfast that inflation would be transitory, attributing much of today's price pressures to temporary supply bottlenecks. Powell also said that he saw little evidence of building inflationary expectations for consumers or businesses. Well, we will see. I would put a crispy $1 bill on the fact that inflation will get worse. So do what you like, people. This week's economic data coming out. We have ISM Services Index coming out tomorrow on Tuesday. Wednesday, we have the ADP employment report. Thursday, jobless claims. Friday, employment situation. We have a few companies reporting earnings this week. PepsiCo tomorrow. Wednesday will be Constellation Brands, and Thursday, Conagra Brands. So not a busy week as far as reports and earnings this week. So we'll see what the market does. All right, I have two white papers going out to you guys. First one is Roller Coaster Week in Washington. Debates over government debt, taxes, and infrastructure have captured the attention of the nation this week. All eyes are on Washington and Wall Street as these events play out, with potential far-reaching consequences that seem to shift hour by hour. Throughout September, the markets have reacted to legislative decisions that could raise taxes for some, well, most of us who actually pay taxes, as well as hotly contested measures to fund the government and raise the debt ceiling. That's a great idea. Markets appear headed to some of their lowest monthly returns in over a year. While this sort of conflict makes for absorbing cable news, it can leave investors with an uneasy feeling. The truth is that by working with a blah, 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 blah. Last part's just an ad. All right. And next one is end of money moves for 2021. All right. So it starts out. What has changed for you in 2021? For some, the year has been as complicated as learning a new dance. Did you start a new job or leave a job behind? That's one step. Did you retire? That's another step. If notable changes occurred in your personal life or professional life, then you may want to review your finances before the year ends and 2022 begins. Proving that you have all the right moves in 2021 might put you in a better position to tango with 2022. I like that dance reference there. Even if 2021 has been relatively uneventful, the end of the year is still a good time to get cracking and see where you can manage your overall personal finances. Keep in mind that this article is for information purposes only and not a replacement for real life advice. That's what I'm for. Please consult your tax, legal, and accounting professionals before modifying your tax strategy. That's my disclaimer voice. Do you engage in tax loss harvesting? That's the practice of taking capital losses, selling securities worth less than what you paid for them to manage capital gains. You may want to consider this move, but it should be made with the guidance of a financial professional you trust. In fact, you could even take it a step further. Consider that you're up to $3,000 in capital losses in excess of capital gains. In excess of capital gains can be deducted from ordinary income, and any remaining capital losses above that can be carried forward to offset capital gains in upcoming years. Do you want to itemize deductions? You may just want to take the standard deduction for 2021, which has risen to $12,550 for single filers and $25,100 for joint. If you do think it might be better for you to itemize, now would be a good time to get the receipts and assorted paperwork together. I itemize my taxes. It's really not that hard, running businesses or running offices out of our house. It gives us a lot of flexibility to be able to offset. For the space that we use, it's a decent portion of our house, and we're able to offset utility bills. What else? Mortgage interest. A bunch of things that. Unfortunately, my tax bill is still pretty high, but it does help. So if you're not itemizing, I use TurboTax. That's not an endorsement of TurboTax. It's just what I've been using since the 90s, and it has all my data in it, and it's just easy. But it takes you through both situations to see which one would benefit you most. Does it make more sense just to take the standard deduction, or, and it does the calculations for you both ways. All right, next section. Are you thinking of gifting? How about donating to a qualified charity or nonprofit organization before 2021 ends? You may qualify as a your gift may qualify as a tax deduction. For some gifts, you may be required to itemize deductions using a Schedule A. While we're on the topic of year-end moves, why not take a moment to review a portion of your estate strategies? Specifically, take a look at your beneficiary designations. If you haven't reviewed them for some time, double check to see that your assets are structured to go where you want them to go should you pass away. Lastly, you should look at your will and see that it remains valid and up to date. Check on the amount you have withheld. If you discover that you have withheld too little on your W-4 so far, you may need to adjust your withholdings before the year ends. What can you do before ringing in the new year? New Year's Eve may put you in a dancing move, more dancing. Eager to say goodbye to the old year and welcome 2022. Before you put on your dancing shoes, consider speaking with a financial or tax professional. I might know somebody. Do it now rather than in February or March. It's funny, little anecdotal story here. When I was cold calling a lot back, more than 10 years ago and doing lots of luncheon events and stuff, you would just, people like this time of year leading up in, school just started, people would give you the excuse, call me back, in a couple months because, school just started, blah, blah, blah. You get to the holiday. It's the holidays. It's like, I used to think to myself, it's like, I'm not that busy, and I'm working 60 hours a week. I have time to go to a meeting, or it just used to crack me up. And it's always the perpetual putting things off that, most professionals do. And it's unfortunate. All right. I did have one article that I did want to go over from the interwebs. This comes from First Trust, one of my favorite investment firms, and they put out some excellent analysis. So, the title of this one from Brian Westbury is called The Cost of Lockdowns. And I'll go ahead and blaze through this pretty quick. And, we'll look at some charting information and then we will be done. All right. Last March, when the government was considering whether to lock down the economy, we argued that the longer we stayed locked down, the more permanent damage we would do to the underlying economy. It's now clear that the cost of the lockdowns is immense. We aren't just talking about the $5 trillion in government borrowing from the future generations, but the clear damage done to small businesses and supply chains. Excuse me. The U.S. economy cannot be switched off and on like a light bulb. Every day, countless decisions are made in order to get the simplest things put on store shelves. One of our favorite economic essays is I, Pencil by Leonard Read, which he writes, not a single person on the face of the earth knows how to make the pencil or make me the pencil. Think about it. We all know the simple components of a pencil, wood, graphite, paint, etc. But it's complex chain of people and events to put it all together. Loggers need equipment, food, and clothing. So do other suppliers. Each part of the process depends on those before. And it's just one part thrown out of whack, making a pencil gets harder. Locking down the economy through complicated supply chains into chaos and restarting them is not as easy as many seem to think. Markets are robust and sturdy, but government decisions made by bureaucrats who at most can handle a dozen pieces of information destroy the information flow necessary for smooth functioning. I'm personally convinced that the retards in Washington just have no friggin' clue. All they really care about is lining their pockets. So, let's see. Add into this mix that government locked down the supply side of the economy, which simultaneously provided rocket fuel through printing and money borrowing to the demand side. A massive spike in consumer spending by people who weren't producing is a recipe for unbalanced markets. It's like causing a car accident and saying that the morphine is the cure. Once the morphine wears off and the injuries remain, and the pain resurfaces, here inflation is one clear result. We have seen ports in Los Angeles and New York thrown into chaos as ships waited weeks to be unloaded, and the cost to ship those containers has soared nearly 500%. Dollar Tree, which sells items many imported for $1, now says they can't do it anymore and will sell items above $1. Oil, gasoline, and natural gas prices are rising. Europe, which also locked down, is heading into winter with a shortage of fuel. Government attempts to alter a well-established industry by forcing it to create more green energy are failing. Government can't possibly manage such a complicated system. The United States Postal Service is slowing down deliveries to save money as financial losses go even higher. Automobile manufacturers can't get semiconductors and are seeing production levels in the face of strong demand, fall behind. All of this was predictable. A market economy only works when information through the price system is allowed to flow freely. Turning it off or trying to manage it to fit some politician's utopian vision of a future creates chaos. In the economy, there is the seen and the unseen. The seen is the fact that you can't buy toilet paper or prices are going up. The unseen is the market system. When Adam Smith called the invisible hand, or what Adam Smith called the invisible hand, the market provides people. The market provides because people work together as a team. Even though they don't know each other, they do it to earn a paycheck or make a profit. To call the system greedy misunderstands the role of profit and how resources are allocated by the marketplace. Free markets require unimpeded information. Locking down the economy and attempting to manage it from Washington, D.C. is guaranteed to create more problems. One of those is inflation. It isn't transitory. It's a natural outcome of decisions that have been made in the past year. Lockdowns will cause more problems than COVID itself. So, well done article. I am noticing a shift in Mr. Westbury's tone when it comes to the economy and the markets. So, I'm noticing that he is, talking in a more of a negative light of government interference today than he was, 6 months or a year ago. So, but like I said, it's if anyone thinks electing, these idiots to solve all your problems, it's not going to happen. My greater fear is simply that, we're going to run the car off the cliff like Thelma and Louise, and it's really going to hurt, the people at the bottom of the economic scale. If we have a crash in the dollar, or the republic completely collapses and we're back to individuals. I mean, it's just going to create a mess. And for those who don't have access to food running through their yard, or have a sufficient nest egg of necessities to get them through a few months, it might be tough. So, that's, I did talk about that last week with Janet. There was an article about Janet Yellen complaining that, if we don't raise the debt ceiling, it's going to put a lot of people in who were in difficult financial positions into tough spots. And it's like, well, I mean, the government did this themselves. They forced the issue. They've, continued to keep interest rates artificially low for over a decade, continued to print money, quantitative easing. I mean, all these things which inflate the economy. And now they're standing there like, oh my God, what happened? It's like, it's hard to be sympathetic. So, all right. I did want to go through this charting a little bit just to cover this with you guys. Ooh, I erased my line. So as we can see here, this trend line is what I've been tracking the last year plus. And you can see, and I've covered this on several videos, that, each time it reached a point of resistance, we had a bounce back. And, just recently, I guess this was probably back in, why can't I get a line here? I guess it's like mid-August, September, we saw this cross. So, what I'm looking for now, why is this not working? Anyways, so what I'm looking for now is this trend going to continue in a downward direction, and how long is it going to continue? Also, the momentum indicator here, the acronym is MACD, has crossed into negative territory. We can see back here what happened at the last time it did. We know what this happened last March, and then the same thing with. Why is this not working? Weird. Anyways, so like I said, will this trend continue for 90 days, 6 months? I mean, if a course correction, if we do have a course correction and it starts heading back in a a northeast direction here on this mat or on this chart, maybe this is going to be short lived. My personal guesstimate is that we were due for a recession when this happened last year. With all the money creation through the Fed, it propped up the stock market and, got it back as high or higher than it was prior to COVID. But, To say we're due is an understatement, in my opinion. But I'm curious to see how long this money train can last and prop up the market. So, I've made some adjustments for my clients so that if things do get too ugly, we should hopefully miss most of the downturns. So. Anyways, I hope everyone has a fantastic week. I am looking at starting a daily show called The Liberty Call. I'll probably start it tomorrow, maybe 20 minutes after the market closes. So I'm just going to be kind of a recap of what's going on during the day. And, for people who, I'm going to start with just the basic stuff. Now, how do you get your finances in order? Really from, the ground zero. If you were to walk into a gym and said, "Hey, I want to look like Lou Ferrigno," that guy played the Hulk for you young people. If I want to look like him, well, they're going to start at, all right, let's start with the bench press, the squat, some simple exercises and get your baseline. And that's what I'm going to attempt to do is, for people who are looking for guidance, they can tune in each day, get some info on what's going on in the markets, what's going on in the news that, the TV doesn't seem to talk about. But anyways, if for my clients who are on my mailing list, if you want to, I might send down an email. I might not. I don't know. I might try to work out the bugs before I do that. But if anyone's interested, feel free to shoot me an email. So be sure to like, subscribe, and share with friends and family. And I've been rambling for 20 minutes. Jesus, I cannot keep my mouth shut. Anyways, y'all have a fantastic week. If anybody needs anything from me, feel free to give me a call, shoot me an email. Smoke signals are always nice. Anyways, all right. Well, everybody have a great week, and I will talk to you later. Bye.